Okay, so that's Equitas, but let's move over to another stock that released numbers, and we're talking about Alembic Pharmaceuticals, and this is in our Insight Edge segment as well, considering that we did have a chat with the management earlier this morning. Now, in terms of the numbers, remember that the revenue was flat this time, but this was versus estimates of around a 4% decline. And margins came in at around 15% versus 11.3%. It was in line with estimates of around 14.7% this quarter. So there was a year-on-year improvement which took place in terms of the margins. However, going forward, the company is indicating that it could be a flattish margin performance in this coming fiscal. Now, one of the key geographies that is tracked quite closely for Alembic is basically what is taking place with the US, which is around close to 30% of their sales. US sales came in weaker than estimated. It came in at $43 million. The street was anticipating around $47 million this time round. In terms of a couple of key takeaways, what the management did say is that pricing pressure, which is something which has impacted them in the quarters gone by, remains in the US markets. The US business volumes have grown by around 15% in FY23. The US FDA, in fact, has increased their inspections. Some disruptions and shortages have taken place in the US markets, which would be beneficial for some companies. And they are still sticking to their guidance of around $300 million in the next 2 to 3 years from the US markets, but they had scaled it down from that $500 million a couple of quarters back. Now, in terms of one of the key developments this quarter, the Q4 FY23, Alembic has written off around 1,150 crores of capital work in progress. This was related to their US-focused manufacturing facilities. The capital work in progress did not reflect in the reported P&L, and the amount was withdrawn from the general reserve. So while the stock is higher by around 2.5%, there was some concerns of a possible overhang of the gross capital misallocation concerns as per some analysts, but that hasn't come through, probably because the street has made its peace with it. This is the piece of news that came out earlier. Lastly, the company says that there are no more write-offs with regards to these 3 plants, and hence maybe the worst is over when it comes to write-offs. But let's listen in to the management. We did have a conversation with them earlier this morning and what they had to say.
In terms of pricing pressure, there continues to remain pricing pressure in the US market. Is it as bad as it was about a year back? Probably not, but it is still, we're seeing erosion on a couple of products where we have some market share. Having said that, though, the US business, in spite of this pricing pressure, we have managed to grow our volumes quite a bit, over 15% in the US this financial year. You have the FDA doing increased number of inspections in the US. So there are some disruptions in the market, and there are some shortages that we're seeing now. There are supply chain shortages because we've seen some of our peers have got FDA issues. So that's one aspect of it. I do feel that at least 300 million could be done. It'll still take about a year and 2 years or 3 years till we get these filings done and get the approvals. But yeah, that numbers holds true. In terms of margins, yeah, they've improved a little bit in Q4 compared to earlier. But moving forward, we don't give a guidance. I think we can keep it let's keep it at flat, because what will happen is on one side that you don't have any of the one-off expenses and the write-offs. But the other side, we have all these new facilities coming in, which for the first year or two will be low margin, and not low margin. The gross margins will be good, but the capacities won't be fully utilized until all the approvals come in. So we'll have to balance those out.
Okay, that's Alembic Pharma, but don't go anywhere. We'll take a quick commercial break. When we come back from the break, we will talk about many more stocks that are buzzing at the moment. So do keep it with CNBC-TV18.